Welcome to FinSights Daily by Finvesting, where we cover the daily updates from the world of finance that impacts your day-to-day life. I'm your host Narendran. Quick reminder, play this episode at 1.5x for a better experience if you're short on time. Let's dive straight into today's market headlines. The Nifty closed above 23,300 levels after two consecutive falling days. Still, the uncertainty in the market prevails. Analysts and experts are in wait and watch mode for the Liberation Day. That's what President Donald Trump calls it. The reciprocal tariff announcement day against several countries is on April 2nd, that is today. This is not just abstract market news, it has real implications to several economies. Did you know that approximately one-sixth of India's goods exports goes to the United States? That's a significant portion of our export market, potentially impacted by these new tariff measures. This will hugely change the government policies and even the investor decisions for upcoming months. When the global tensions rise, investors typically seek safer havens for their money. And speaking of safe havens, gold is one such thing. Gold has reached an all-time high of 91,300 rupees per 10 grams on the MCX yesterday. The precious metal has gained approximately 18% so far in 2025, building on an impressive 27% increase we saw in 2024. This surge is directly connected to the US tariff measures I just mentioned. It's a classic market pattern. Everyone rushes to gold, even the big investors, when there's a turmoil in the markets. Gold is often seen as a store of value during uncertain economic times. For those of you thinking about your investment portfolio, this might be worth noting. However, remember that gold prices can be volatile and historically tend to stabilize after such rapid increases. So, now moving on to the next segment. Now, let's shift our focus to some crucial domestic financial news. The IMF, that is International Monetary Fund, under its Financial Sector Assessment Program or FSAP, has recently published some interesting findings about India's financial system. According to their assessment, 80% of our adult Indians now have financial accounts. This is truly remarkable progress in financial inclusion compared to where we stood just a decade ago. The IMF report suggests that India's financial system reports robust overall. However, this is important. It's not bulletproof. They have identified that our financial institutions are tightly interconnected. When things go wrong in one sector, problems have a tendency to quickly spread from entity to entity. Any of the concerns the IMF points to, whether it's a power sector default, a climate crisis, or a public sector bank collapse during an economic downturn, could potentially send shockwaves throughout the entire system, affecting everything from banks to NBFCs to bond markets. This raises an important question. How can we identify a strong, resilient financial entity for our investment purpose? That's a topic we will explore in depth in an upcoming episode. So be sure to stay tuned. Well, that's all for today's FinSights Daily. Thank you for joining me. This is Naren signing off. I'll see you on next episode with fresh updates from the financial world. Have a wonderful evening and remember, stay financially savvy.